Hello, my name is Arpit Agarwal. Yesterday was a historic day, 8th of February 2021. The Nifty crossed 15,000 after 25 years. A couple of weeks ago, January 21st, the Sensex crossed 50,000. Markets are at all-time high, and some of you have asked me, what should we do now? Some have not entered the market yet, and some have entered the market, are sitting on handsome profits. What should be our strategy going forward? And this video will attempt to answer some of those questions. I will also, in this video, present my view on the impact of the budget, which was a few days back, on the stock market. So let's start by looking at not too long ago, last year, January of 2020, Sensex was around 42,000 something, crashed 40% by 23rd, 24th of March. 24th of March 2020 was at its lowest, around 25,600 odd levels. And from there, we've more than doubled on the Sensex. And that's fantastic because I don't think anyone was expecting the market to recover the way it did. And in my previous video, I have covered some of that aspect. And even at 42,000 levels, high of January, we are sitting at a good 20-21% gain in less than a year. So let's see what the budget did. For me, it was a fantastic budget. I'm an equity investor. Most of my money is invested in equities. And the budget gave me a very interesting signal in relation to my equity strategy. And what was that? While the world, or a majority of the world, is busy printing money and supporting their economy, I felt the budget sent a signal saying we will fix India and we will strengthen its core. So printing money for me is like allopathy treating a specific ailment, while fixing your core is more like exercising, meditation, homeopathy, all of that, where your current problems don't go away immediately, but as your body strengthens, you become resistant to future problems. And you become healthier and stronger. And that's what India is adopting. What has the government said? The government has said that we will increase our fiscal deficit, which is the gap between the income we earn as a country and the money we spend. We will let it increase a little, and we will fund it with our own efforts. We will not burden the taxpayer to fund our efforts. And what will we do? We will divest some of our companies, the companies that the government owns. We will privatize some of our companies, and we will sell our non-core assets. Typical example, we'll give the management of a stadium that we own to a private enterprise, or we'll do some public-private partnerships. And there are enough and more data for you to read that. I'm not going to put it in this. So the government is going to find its own money to finance the country's development, which is infrastructure, railways, sanitation, core health systems, and water. There are so many things that the government will do that the country will become stronger. So in a few years' time, when all of these efforts fructify into tangible results, we will see a healthier and economically and financially stronger country. What's going to happen to the stock markets because of that? As the economy grows, more wealth gets created. You and I will have more wealth through various professions, vocations, whatever we do. Opportunities to create wealth will increase, and therefore we'll be able to deploy it. In about 5,000 companies that are listed in this country, the top 500 account for 95-96% of the market cap. So if you start focusing on creating a portfolio of 30-35 good companies, you should be set. And from a perspective of 15-20 years. Because my view is equity investment is long term, because any company takes years to become a great company. And just to give you a small example, in the Nifty 50, which is now 25 years old, a little more than 25 years old, there are only 13 or 14 companies, if I remember correctly, which have stayed in the Nifty 50 from the day it was incorporated in November 1995. All the others have changed over a period of time. And those companies, those 13, 14 odd companies, which have stayed in the Nifty 50, have given an average growth rate or compound and the CAGR of 17-18%, if I remember my numbers correctly, versus the entire Nifty 50 at about 11%. So they've actually outperformed the Nifty 50, and that should be your portfolio strategy. So let's look at how should we construct a portfolio, whether you are an existing investor or you are starting off afresh. The first is you have to make the portfolio not very large, 70, 80, 90 companies. It should be 30, 35, at max 40. Number two, they should all be great companies. So pick up, how do you do large cap, mid cap, small cap first? So let's say pick up the Nifty 500 or the BSE 500, and you will see large cap is around 75, 76%, mid cap should be about 15, 16%, small cap should be about 7, 8, 9, 10%, depending on what stage of the market is. And that's how your overall portfolio should look. Within your portfolio, you have to see again through one of these indices, any one of these indices you can decide to take. So let's say if banking and finance is 25% in the index, technology is whatever, 11, 12, 14%, auto maybe X%, try and mirror your portfolio to those broader industry allocations that you can see in the index. And then within that category, so if banking and finance is 25%, you have to think which are the top 3 banks that I feel are great banks and which will do well for the next 20 years. Which are the top 3 IT companies which will do well in the next 3 years, or sorry, 20 years, not 3 years, 15, 20 years. And the same way you go sector on sector and you'll have a portfolio of 35, 40 companies. The other thing you have to do is keep 15 to 20% of your portfolio in cash. When I say cash, either in a savings account or in a liquid fund. Because nobody can predict a stock market correction or a stock market crash. So when the stock market corrects sharply, or there is a crash because of a global event, the way it happened in COVID, you have 15-20% readily deployable cash to go and buy stocks which are available at substantial discount. And at times like today, when the market is in euphoria and virtually every media report that you see or research report that you see or tweets that you see keeps predicting Sensex will hit 55,000 or 60,000, Nifty will hit 17,000. So when this euphoria happens and this super excitement happens, that is the time for you to start booking some profits. So if you've bought something in a correction for 100 rupees and it becomes 120, 130, 140 at times like these, you take away 20, 25 from that and put it in cash. And that's all that there is to create a fantastic portfolio which gives you above market returns consistently for the long term. Some of you may want income from your portfolio, so you can start looking at stocks which have a good dividend paying capacity. So every year you have some cash coming out of your portfolio. Managing an equity portfolio is not rocket science. Most people make it rocket science because they get bombarded with so much of noise that either fear sets into their mind or it's too much information, I can't handle it, sits in their mind. And therefore they shy away from investing in equity. And over the last 30 years that I've been advising investors, I've said managing an equity portfolio is probably the simplest thing in the world if you follow very simple rules. And yet, if you feel you don't have the time, the acumen, or the ability or the desire to spend studying, researching, doing all this, then we have a fantastic mutual fund industry. Just pick up 3 or 4 great equity funds from some really nice AMCs and do a systematic investment plan and invest a certain amount every month on a regular basis. When the market corrects, you'll get more units. When the market goes high, you'll get less units. Over a period of 10, 15, 20 years, you will create significant wealth. Just the way Sensex over 40 years has grown at a CAGR of more than 10, 11%. Nifty over the last 25 years has grown at a CAGR of about 11, 11.5%. That is index as a whole. But there are certain companies within those indices, great companies, the criteria for which I've already given you, have grown at 15, 16, 18, 20, 25%. And if you're lucky enough to have picked some of those companies in your portfolio, you'll even beat the market. I'll talk to you again and I'll dig deeper into some of these aspects and help you create a good equity portfolio.